Well, good morning. Good Friday morning, Rip. A little pep in your step here today. Let's talk about what we've got going on in the markets, right? That's where we're going to go. We're going to go right to that corn board and see what we did overnight, right? We're not open yet, but I get all excited and sometimes think we are. We got a little bit of a rally going, and it feels like we're up 20 cents, but we're only up about 2. Overnight corn was up 1 3/4 cents. We went out at 4.37. Feels like we've been around that level before. A penny and a half off the highs and about 3 cents off the lows, or 2 1/4 cents better in the new crop D's. That's 4.75 and a half. All right, that's what we did overnight in corn. Overnight in beans, a little bit easier. 1.5 cents lower in the May. 11.78 and a half is last there, and if you go all the way out to the new crop, that's down 2.5 cents to 11.81 and a quarter. But either way, not a lot of big changes in either corn and beans overnight. Let's take a look at Chicago wheat. That was up though, double digits, 12.5 cents. 5.68 3/4 is good. And they had a decent range over there of about almost 20 cents, folks. So we're right in the middle of it right now. 9 1/4 cents. Well, so 10 cents better in the D's if you go all the way out there. 6.23 and a half is last in D's Chicago wheat. From Chicago, let's go to Kansas City, see what we did there overnight. Decent gains, 6.5 cents up front. 5.84 is last, 3 3/4 cents off the high of the day and about 9 cents off the low. D's hard red wheat in Kansas City was up 6 1/4 cents overnight to 6.12 and a half. Spring wheat, well, I'll give it to you. 5.5 cents higher there. 6.51 3/4 was last. And that's about 2 1/4 cents off the highs. You go out to the D's, 5 cents higher there. 6.87 and a quarter. And that's about a penny and a half off the highs there. And then finally, cotton, what did that do for us here? 49 points lower again. 86.65 is last. And that's the May contract. D's was down 63 points to 82.89. Let's bring in our guest analyst to kick off things here on a Friday morning. That's going to be Mr. Brian Hoops with Midwest Market Solutions in Springfield, Mo. All right, yesterday was kind of quiet, Brian. It was kind of a struggle here to keep talking about something different all day long. But we did it, and it doesn't look to be a ton of different things out there this morning. A little bit of a rally in wheat, but what are your thoughts?
Yeah, we can talk about a lot of different things. I think rally in wheat, first of all, I thought was caused by holdup in shipping from Russia wheat to Egypt that they had purchased. There was a paperwork delay, and it kind of rose world wheat values. Anticipation that maybe Egypt would end up canceling these purchases from Russia and buy from someone else in the world. But it sounds like that paperwork has been cleared and that ship is going to go out. So I wouldn't be surprised for wheat to back off of its highs from the overnight. Plus, you have the fact the U.S. dollar is just screaming higher this morning after that non-farm payroll number that came out. That was widely above expectations, but it's a typical government fashion. They give you a bullish number, but then they revise the number the previous month to a more bearish number. So this number in March probably be revised down at some point in the future. They revised February's numbers down from last month. So that number has the dollar higher, gold and silver selling off as a result, and then we see the that's probably going to pressure wheat. In the corn, it's going to be hard, I think, to sustain rally. There's good rains in the forecast for that safrinha corn crop. They're going to have a good crop, it looks like, without much of any weather threats. So it's going to limit the upside with really the lack of any weather potential to give us more upside strength. So it's going to have to come from some technical buying, fund-related buying, some demand news or something, and it's probably just going to leave us in more of a choppy type market action than any type of a sustained rally.
All right, good stuff. So what I got out of that was a shipping clerk, not to be named, across the world, was long wheat and found a way to get out of his position by forgetting some papers. Is that what we got out of that?
I think so. I think that's what happened.
All right. Great stuff, as usual. Stay right there, though. We need to go away. We're going to pay some bills. We're going to come back and talk more livestock with Brian Hoops after this. All right. Why don't we see where livestock closed yesterday, right? This always trips me up, too. I get all excited thinking we've come out of the box. But it was a kind of a quiet day yesterday. Let's take a look and see what live cattle did for us. Up 55 cents. In the old days on the floor, we would call that double nickels, right? Because it sounded like too many different numbers, 55 when you yell it. 181.47 was last in the April. That's where we closed. Go out to the D's, $1.05 higher out there. So we added in about another 55 cents to 180.85. If we go down to the feeders, what did the feeders do for us? Well, they were a little bit better as well. April closed up $1.75 to 242.70, and we had September up $1.72 to 255.80. And then finally, if we look at lean hogs, well, lean hogs They were slightly better, too, across the board. 37 cents higher in the April, though. It was almost a leader. It was a leader. 88.35 was the close in April. All right, let's bring back in Mr. Brian Hoops. Brian, any insight as to where you think these livestock prices go today?
We're still going to track the cash markets. April is hugely discounted to the cash. Even if it comes down $1 or so this week, we're still deeply discounted. And with the first notice day beginning Monday, it doesn't look like there'll be any real chance of any deliveries. So the fact that we're discounted helps us absorb some of the other negative fundamental news. The cutout values continue to work lower. That's hurting packer margins. It's now estimated at about $140 a head in the red for each animal they kill. They're losing some money here, and that is not going to help out our slaughter pace, which is already behind last year's pace. Our steer weights are increasing. We're about 28 pounds heavier than a year ago. So we're coming into a time frame where we have a little bit more cattle coming at the market. We have less demand, less slaughter, but bigger supplies because of the heavier weights. So it's not a real bullish combination right now for the cattle producer, and we may see this market just kind of slide steady to lower here for the time being until we can get these fundamentals to turn back around.
So are the hogs going to benefit from that?
Yeah, I think they probably will. We've seen better exports in the hog market than we have in the cattle, for sure. I think the consumer demand is going to be there for the pork products. They're discounting pork chops this weekend across grocery stores here in Springfield. 99 cents for an 8-ounce pork chop. That you can't go wrong with a price like that.
It's amazing.
And it's so much cheaper than a steak right now.
Yeah, I mean, it's not even in the same ballpark. Was it you that said you had a big special by you about 99 cents for something versus $20?
Yeah, your pork chops versus your steaks, 99 cents for an 8-ounce pork chop versus about $20 for an 8-ounce steak.
It's just amazing. Yeah, you got to go pork all day long now, right?
Yeah, you have to.
All right, great stuff. Maybe we'll go have some bacon now that we got done talking about this. But I appreciate you being on. Have a great weekend, Brian Split from Midwest Market Solutions. He's in Springfield, Missouri. We're in Nashville, where I get to say good morning to Suzanne.
Good morning. Good morning. Happy Friday to you.
Yeah, there's only one a week. Don't screw it up.
Exactly. That's hard.